Who knows what the difference is? Isabella, you're around.
Yes, I'm around.
Please, you know the difference between net and then gross.
Please, I'll try.
Okay, you try for us.
So, gross something like gross salary is when your salary, there's no deductions, there are no deductions made, but the net
Yes,
salary is when there are deductions made from your
yes,
salary till before you have been
yes,
given the money.
yes. So you are perfectly right. So that's basically the difference between net and gross. So gross is like the thing there as it is, no deductions, the full amount. And then after you've made your deductions, like maybe taxes, contributions, and all that, what is left is now your net. Okay. So the reason why the net and the gross was causing a confusion is that you see over here in column B, where we have the net price, it kind of gives the indication that the prices over here is after the taxes have been deducted. You get it? So if they are saying here is the net price, it's trying to tell us that okay, the prices here is after the taxes have been deducted. So if you are supposed to find the prices in column C and D, it looks like we are trying to find the gross price, which is before the taxes have been deducted. Okay, any confusion here? Any confusion? Okay, Dennis, you can speak.
Please, you've written without taxes, so I
Yes,
don't see the confusion here.
yes. So without taxes, and then the net price is what is actually causing the confusion. So you see that over here in column B, they are saying without taxes. Now in C and D, including the taxes, it's two ways. Okay. So in fact, what I'll do is I'll actually mark both ways correct. So what we can do is that if they are saying column B is without taxes, then it means for column C and D, we have to calculate the gross. Okay. So it means that what you have to calculate for C and D has to be higher. So we can do something like ratio and proportion. So what I want to do now is to use the first approach to do the work, the calculations for you. And I'll use the other approach, which I'll explain later. So it's like, so 39. 39 is the net, which is without taxes, after the taxes have been subtracted. And that the taxes is 9.9%, okay? So it means that this 39, so we do ratio and proportion, if more or less divides, if less more divides. I hope you guys know that already. This should be percentage. Okay. So 1 minus 0.049.
Sorry, please, we can't see your screen.
Oh, really? Okay. Let me share my screen again. Can you see my screen now?
Yeah.
Okay. So it's like this, okay? So without taxes, which is the net price, after the taxes have been deducted, it's 39 cedis. So this 39 cedis in percentage terms is 90.1%. The reason being that the taxes is 9.9%. So the question is, if 90.1% gives us the 39 cedis, the gross amount, which is the full amount, is 100 cedis. So how much will that be? That one will be more than the 39 cedis. So this is where we say if more or less divide. So it will be 100 over 90.1 times 39. So we can input that formula over here. So you can do something like this, 100 over, so the 90.1 it's actually 100 minus the tax rate, which is the 9.9%. Okay, so you can do something like this. Let me close this bracket times the net price. So that I get 39.4. So after this, we can double click to use autofill till the end. Okay, so we are seeing some errors over here because I did not lock the formula for the New York tax rate. So let me do that now. So I'll put a $sign in front of the E and then in front of the 5. Okay. Any question or confusion over here?
Yes, please.
Okay, please ask a question.
Okay, please. If the net price without taxes is 39,
Mm-hmm.
and after calculating the net price including taxes is 39.04, then it means that 9.9% of 39 is 0.04. 0.04.
Yeah, okay. I think I've seen where the mistake is. So this should be 1 instead of 100. Because the 9.9 is in percentage terms, we also have to use 1, not 100. Does it answer your question now?
Yes,
So
please.
let's do the calculation and see. So this times 9.9%, which is the tax. Oh, why is it formatting in percentage for me? Okay, so this amount, so this is the gross before we calculate our tax, and they say the tax is 9.9%. So this times 9.9% gives us 4.29. So now let's see, 43.29 minus 4.29 gives us the 39, which is the net price. I hope that answers your question, right?
Please. Yes, please.
Okay. So you can do the same on this side too. So it's going to be 1 divided by 1 minus the tax rate, 8.95%, and times the net price. So we have to lock the reference for the tax rate. We put a $sign before the B and then a $sign before the 5. Then we shift it down. Okay. So any question over here? So to confirm our answers, let's do what we did again. So this times this is the tax. Okay. Then this minus the tax will give us the net price, which is 39. Any question over here? Okay.
Sir,
Yeah. Let's pick up.
I also use an approach that I had an answer close to what you had.
Okay, so what was your approach?
This is how I say, I open brackets, so I brought the equal sign, I open brackets, and then I reference the tax under the New York, that is 9.90%, and multiply it by the product, the 39.000, the 39.00, and I close the bracket, then I bring plus that same row, that is 39.00.
Okay, that's all right.
And that one, it's like, meaning I first of all looked for the 9.90% of 39.
Yes.
I look for 9.9% of 39, and
Yes.
after getting that, I added that to 39.
Yeah.
So I locked the New York percentage. I lock it, and then I drag it down.
Yes.
Under the
So I also did the same thing.
Yes, yes. So that was the second approach I was trying to show you guys, because most of you did it that way. Actually, might be wrong. But then on the second thought, because of I'll explain to you why I'm considering that answer as well. So what you said then, if they didn't put this net price thing over there, they just left it like this, maybe price without tax, that would have been like the only answer to consider, and not what I just did. Okay, but you saw that before I started, I tried to let you guys understand the difference between net and then gross. Okay, so if they are saying this is the net price, it means the tax have already been deducted from it before they arrived at this amount. So if the tax has already been subtracted from this, you can't calculate the tax rate on this again. It means before they got this amount, if this is the net price, before they got this amount, they calculated the tax on something and then subtracted the tax from that something before they arrived at that 39. You get it? So if we are going by it that this column here is the net price, then what I did will be the only correct answer. But because of the without tax they added over here, and then the including taxes too that they added over here, that's why I want to consider this solution that you are talking about. So I'll actually mark you correct if you did it the way you are saying, the 42.86. Do you get it?
Okay, sir. Thank you.
But let's see.
Sir, please.
Go
Pastor,
ahead.
please, can you repeat your format again?
Okay, so let me show you something. Let's see if okay. So let me show you something. You see, per your calculation, you get 42.86, right? Can you hear me?
Yes, please.
Yes.
You got
Please,
42.86.
a quick one.
Oh, let me answer.
Yes, please.
Is it Charles's question first, and then I'll come to you, Dennis.
Yes, please.
Okay, so per your solution, 42.86 is the price that includes tax. Am I right?
Yes, please. Yes,
Okay, so
please.
now let's calculate the tax from the 42.86. So the tax amount will be this times this 4.24. Is that fine?
Yes, please.
Now let's calculate the price without tax. You see, you didn't get 39.
But sir, hello sir.
Hey, hello.
But it's because like have you seen with the explanation you gave depending on net price and then without
Yes,
price.
yes,
And
yes.
that's why you are getting that. So if we are using the without tax, like Burmese won't get like the value
Okay,
that we had there.
okay,
Yeah. So with your explanation is clear.
okay. So, but I also want him to.
Sir,
Okay,
sir,
yes, Charles.
the
Let
tax,
me take you one at a time.
sir, the tax is, the tax is 3.86.
So how did you
The
get your
tax
tax?
amount.
This times this.
So I multiply 9.9 by 39.
39.
Yeah, 9.9% by 39.
Okay, so that
And I
you
have
get the
3.86.
okay. But you see, if this is your amount that includes the tax, and you want to calculate the tax, which amount will you multiply the tax rate on? Let's say your salary
Sir,
is
come again, please.
okay. So let's say your salary is 1,000 cedis, and they say the
Okay,
taxes on
sir.
your salary is 9.9%. So to get the tax amount, the 9.9%, which amount will you multiply it by?
By the salary.
Which is the 1,000.
Yes, please.
So it's the same thing over here. Your 42.86 now. That's why you
Okay,
see
sir.
the New York price includes tax. So the tax is already in it. So
Okay,
if you
sir.
want to calculate the tax amount, won't you multiply it by the 42.86? Do you get me?
Sir, if hello.
Yeah.
Sir, I don't.
If they say it includes tax, then like
Uh-huh.
we are taking it out like they've taken the tax out of it. Or if let's say
If,
what
mhm.
Yes, please. If that one includes tax, then I think the tax amount should be taken from it rather.
yeah.
So if the tax amount is taken from it, won't you multiply the tax rate by that amount?
So no, so like I don't think we use that as the this thing, the base
Okay,
to want to get the tax amount.
okay, okay, okay.
So me, I'm just thinking that the explanation we gave on the net price
The net
and then
and
the gross
gross, ne?
price, yeah, that one is
Okay,
clear. So if
it's
let's
clear.
say me, I also work it out without tax. So without tax,
Mm,
what the guy did is what I did. But if
okay,
I'm taking it as the net price with your explanation, it's clear, very clear.
okay, okay.
But me, I use the
Without the
without.
tax and
That's
then
why,
the
yeah,
including tax. Yeah,
yes,
so that's why I said the without and including is what is considered coefficient. So either way you do it,
Yeah,
I'll
yeah,
actually mark it correct for you. If you
yeah.
use the
So
net and then the gross
thank you very
approach,
much.
yeah, you're welcome. If you use the net
Yeah,
and
please,
gross
but
approach,
I
it's
want
fine.
you to go over I want you to go over a brief one, your format.
Yeah, the net. Do you understand the net and gross, or is the actual function that
Yes,
you want to
please.
understand?
Sir, how you calculated your tax
Okay,
amount?
okay. So if we understand that this is the netter, it means this is the amount after we've done all our deductions.
Okay.
Okay, and all our deductions in this case is the tax, which is this rate, the 9.9, and then the 8.95.
Okay, sir.
Okay, so it means that, so now let's do this ratio and proportion thing. So 1 minus the 9.9%, no, let me put it in percentage terms. 90.1%. It means 90.1% is this 39. Do you get it up to
Okay.
here? Or
Yes,
or
please.
just say that the 39, no, is equal to the 100% minus 9.9%. Okay. So if the
Okay.
90.1% is 39, what will 100% be? Which will be the 100%, which is the gross, and what will it be?
Okay.
That's what you do. If more or less divide, if less more divide, then you get the answer. So that's
Yes,
what I did
please.
too.
Or you do the cross multiplication.
Yes, cross multiplication, exactly. Yes. So when you get that, then you just put it in your formula over here, then you are good to go. So you see that over here, I have some 1 minus A5, the 1 minus the tax rate. So the 1 minus the tax rate is the 90.1%.
Okay, sir.
Yes. So I did it that way in case anyone decides to change the tax rate later on, it will affect all my values at the same time. Okay. So we can move on to the next one. For the next one, almost everyone had it
hello,
correct over here. Yeah, hello.
hello. Please, with the like the previous one we just did, like you marked me wrong, go.
Oh, so I said that I'll go over it again. I'll mark you
Oh,
guys
okay,
correct. So you
thank
didn't
you.
hear me say that.
No, I joined late, that's why.
Yeah.
Right,
Yeah, I
thank you.
realized that most of you were using that approach. So I just decided to read the question again. Then I realized that that was where the confusion was coming from. So I decided that I'll mark you guys correct.
Oh, okay, thank you.
Yeah. So okay. So the second one, do I even have to explain it? It seems everyone got that one correct. Does anyone have any question over here? If not, I'll move on. The multiplication table.
Sir, I was able to do it though, but I want to know if I want to highlight a range and
Mm-hmm.
still be able to type in that range so that immediately I hit Control Enter, it will fill up the entire space. Is it possible to do it like that? As in highlight a certain range and select one
It's
cell and type in without losing the highlighted distance? Yes, please. Like how
so
you
you like
highlighted it
this,
and
you type
yes,
over
please.
here. I
Yes.
don't know if that is
So you see,
possible.
oh, okay.
I don't know. Does anybody know
So
anything about that? You go ahead. Go ahead.
okay, so if you want to,
Mm-hmm.
let's say after getting the formula right, and you want to do it, let's say with a shortcut so that it will fit the entire range. Is there any shortcut like that? Because me, when I was
Okay.
doing mine, I need to drag it down. So I was imagining if I have like plenty figures, I'll be
So
dragging.
sometimes you don't need to drag down. I told you that you can double click on the arrow here. You see,
Okay.
I even did it when we were doing the sales tax. Let me show you something. So when we were doing the sales tax, I didn't drag till the very end. I just did the first one. And then when I brought my
Okay, sir.
cursor over, I double clicked on it. You see, I didn't
Okay.
have to drag. So if you want a shortcut, maybe you can use that. But one that can fail. You see, the issue is
Sir,
that. Okay, go ahead.
sir, please, that one too, does it work on if you want to take it to the right side? You just right click and then it will go to the right
Okay,
side.
so I think it only does vertical like button. I'm not sure it could go to the
Oh,
right
okay.
side. Mhm. So
Okay, sir.
dragging down and then dragging right was a lot of work for you, eh?
Sir, the down one was not difficult, but the right side,
To the right,
I realized. So though the figures were not that place, so I was
yeah,
able
there
to
were no
do it.
many.
So I was thinking about it. What is
Yeah.
it? Yeah.
Mhm. So right
Okay,
at
sir.
the
Thank
moment, I
you.
don't think there's any shortcut to that, but I won't be surprised if there is. So I'll just look it out. If I find anything like that, I'll share with you next time.
Okay, sir. Thank you.
You're welcome. So anyone who doesn't understand this side, I don't want to go over it again because almost everyone got it correct. So I was thinking this would rather be the challenging one. Okay, so if no one has any question, you resume with our class on the
Sir,
preparation of financial
frankly,
statements.
sir, that one, frankly speaking, it was quite complex. I needed to think about it. I tried like
Uh,
several formulas and it wasn't working.
yeah, but so far as we're able to get it there, it's fine. You might, so when I'm doing it,
Yeah, thank you, sir.
I have to do it. Okay, let's do it and see. Me personally, I don't know the formula of it, so I start by doing it. If it doesn't work, then I'll see where the error was. Then I'll go and fix it. Then I'll do it again. So I know that in the first row over here, I need to multiply each of the numbers here by 1. So let me see. This times 1. So let me drag down. When I drag down, I realize that I'm not getting what I want. And the reason is that when I drag down, it's not staying on the 1. Okay. So the 1 is on row 8. So let me lock row 8. Row 8 is over here. Let me lock it and see what happens if I get what I want. Okay, so if I've got what I want, this is correct, right? So now let me drag to the right side and see what happens to. Let's see. Okay, so I've seen that when I drag to the right now, it's not staying on column A. Okay, so it's moving away from column A. So it means that I have to lock column A too. So let me lock column A like this. Now let me do it again. I come down and I go to the right. I think I have what I want now. Let me see. 10 times 10. And let me see. 12 times 26. Yeah, so that's it. Charles, did you see the approach I used?
Yes, please. Yes, please.
So yeah, you don't really need to know that. Okay, you have to lock the column A and then lock row 8. So just start with it. So start with the normal formula. This times this, and then use your autofill. If you see where it went wrong, then go and fix that side. Then you do it again. If it still doesn't work out, then you identify where it went wrong and then you fix it again. So in about two steps, I was able to do this.
Okay, sir.
Okay.
Thank
Yeah,
you.
so that's it. So as I said, most of you got it correct. I don't know if you guys copied that, but almost everyone got it correct. Okay, so let me stop sharing this screen, then I'll share the financial statements. Please let me know if you are seeing my screen. The Excel sheet with the financial statements format. Can you see my screen?
Yes,
Yes.
Okay. So a quick recap. So last week we said that we have 5 financial statements. statement of financial position, which is the balance sheet. Can anyone give a small summary of the balance sheet, or basically like what I'm expected to find in the balance sheet? You remember the elements of financial statements? We said we have assets, liabilities, equity, income, and then expenses. So if I should open a balance sheet, which of these elements will I find in?
The balance sheet constitutes the assets, the capital, and then the liability.
Okay, that's right. And I also mentioned that whenever you hear them talk about somebody's net worth, it means they calculated that person's balance sheet, and then they realized, okay, so this is how much the person is worth by considering the person's assets and then liabilities. Okay, so that's balance sheet. And then we have the income statement, which is also called the profit or loss account. So for that one, you find your income or revenue there, and then your expenses. And that statement is telling you that this is your profit or this is the loss that you made. So while the balance sheet is telling you your net worth, the income statement or the profit or loss account is telling you how much profit or loss you have made in a particular period. Okay. Then the other financial statements we will consider in our class is the statement of cash flows. So from the very first week, we spoke about cash flows, which is the inflow and then outflow of cash. So that one too can be similar to the income statement or the profit or loss account. Just that over here we consider the actual movement of cash. Okay. For example, the profit or loss account will tell us that we made sales of 1,000 cedis, but it's possible that out of that 1,000 cedis, no, people have paid for just 800 cedis. So in terms of profit, we have made sales of 1,000 cedis, but in terms of cash, it's only 800 cedis that has come in. So that's the little difference between the income statement and then the cash flow statement. But it doesn't mean that their formats are the same. I'm just letting you know that the cash flow also kind of considers profitability, but over here it focuses on the movement of cash. Okay. So now let's go to our practice question. Which lady is reading for us today? Isabella has already spoken. Priscilla, are you available? Isabella, will you read for us again? Winifred. Okay, Winifred, please go ahead.
Okay, so BGS Limited retail fertilizer to farmers in Ghana. The company has approached its bankers to provide funding for the next year's operation. And for the next year's operation, and 3 months budget has been requested for review by the bankers, sorry. You have been approached by the management as a consultant to prepare the first quarter budget for the bankers' consideration for its next year's operations. End of accounting year, December 2014. Should I continue?
Yes, please continue.
Okay, so they have debtors and then the amounts. Bank balance 23,000. Fixed assets at cost is 55,000. Sorry, bank balance is 55,000.
Yes.
At cost is 698,000. Creditors is 48,000. Operating expenses for the month of December 2014 is 60,000. Sales for the month of December 2014 is 400,000. December ending inventory is 20,000. Retained earnings is 120,000. Accumulated depreciation balance is 98,000.
Okay.
The following The following additional information was also provided to assist your work. Depreciation is provided at the rate of 5% on cost of non-current assets. Closing inventory is expected to increase by 2,000 in January from December levels. This is expected to increase by the same figure in February from the project figure in January. Expected purchases are also as follows. January is 347,000, February is 398,750, and then March is 458,263. Operating expenses is expected to increase by 10% from that of December, and this is projected to increase at the same growth rate to March. Admin expenses is expected to be 25,000 each month. Sales is projected to grow by 15% from December until March. The debtors figure is designed to be proportional to the sales value. Creditors value for the 3 months are expected to be as follows. January is 50,000. February is 46,000, and in March is 52,000. You are required as a consultant for BGS Company Limited to prepare for their bankers the income statement for the 3 months, the balance sheet for the 3 months, and the cash flow statement for the 3 months.
Okay. Thank you very, very, very much. Okay. So before we get into solving or preparing our financial statements, from the question you can see that we are currently in December 2014. Okay. Or the current year in the question is December 2014. But then what the background is that the company BGS Limited wants funding from a bank. So as part of processes of getting the funding, the bank wants to know how their financials is going to look in future. Okay. So they want to know how profitable they'll be in future. They want to know their net worth in future. They want to know the movement of their cash in future. So what they've requested is that, okay, so do an income statement, a balance sheet, and then a budget for us. But these financial statements, don't do what has already happened in the past, but then do what is expected to happen the next 3 months. Okay. So the question has given us the figures of the things that happened as at December 2014. So you can see that the operating expenses for December 2014 was 60,000. Sales for December 2014 is 400,000. So it's like we are going to use what has happened in December 2014 to estimate or to make a forecast for the next 3 months, which is from January to March 2015. You get it up to this point? Hello, any confusion, any question? The difference I'm trying to draw your attention to is that usually when you're preparing financial statements, you prepare for things that has happened in the past. So it's like, let's say this year has ended. So in most organizations, you realize that most organizations are now preparing their financial statement for 2022. Okay, so they are using past information to prepare their financial statements. But in this scenario, a company wants to go for funding, and then the bank that wants to give the funding wants to know their performance in future. So that if their performance is good enough, then they can be like, okay, so we can give you the loan. But if their performance doesn't look good, then they will decline their request for the loan. So we are going to prepare financial statements that are going to look into the future. So we will use the present or the past information to make estimates about what is going to happen in the future. Okay, so you can see that from the additional information, the third statement like this. It says expected purchases are as follows: January, February, March. So these purchases hasn't happened already. They are expected to happen from January to March. Okay. If you check operating expenses too, it says expected to be. So they are not things that have already happened. They are things that are expected to happen in future. Okay, so let's start. You guys should open the question and then your Excel sheet so that you can work along with me. Do you all have the questions?
No, sir.
You don't have it. Please check from your Google Classroom. It was uploaded there last week.
Yes, we have.
Okay, sir.
Yes. Those of you who don't have it, please get it as soon as possible. Yeah. So that we can all move together. If you don't move together after the class, you might forget everything. Okay. Have you already? Are we ready to start? Please let's try move together at the same pace so that we won't be going up and down plenty. So what I usually do before I start is to hide my grid lines. Okay. So I'll go to View tab and then uncheck the grid lines checkbox. And so we are going to start with the income statement, which is the profit or loss account. Let's see what the question stated it. So the question said income statement. So we're also going to call it the income statement. So we will first start with the name of the company, which is BGS Limited. Okay. So income statements for the period. Because we are not just preparing for one period, okay, this is how the heading is going to look like. So BGS Limited income statement for the period, then I'll bring a colon. Then January, then March. Because it's just 3 months, I'll just type everything there manually. If not, I would have used autofill to get to the end of the year. So like this, April, May, June, July, August, September, October, November, December. But it's just 3 months, so typing everything out won't be a problem. Okay. So now let's try and make our headings look beautiful a bit. So I'll apply borders below the month. So home tab, under the borders, bottom border. Then I'll bolding BGS Limited. I'll bolding income statement for the period. First, let me bolding the months too.
Sure.
Yes.
And please, can someone just send the document on WhatsApp for me?
Okay. Please, can anyone send it to your WhatsApp group? Why can't you access the Google Classroom, Isabella?
Say I have, but I
Mhm.
have, but I am unable to download it on my phone unless I connect it to my computer.
Okay, let me try and download it and send it to you.
So like it's a long process.
No problem, I understand. So that means next week, please try and download it. Go through the long process before class starts, okay?
Yes, please.
Thank
Sir,
you.
please, I'm at the classroom, but I can't locate the file.
You at where?
I'm at the Google Classroom, but I can't locate the file.
Or go to so BGS, Best Grade Services, Financial Modeling, and where is it? Where is it? Where is it? You can go to class. I'm using the mobile version, so I don't know how different it is if you're using the website. But if you should see something like classwork, a menu for classwork or something like that, you don't worry. I'll download it and share it in the WhatsApp group for you. Let me do that right now. I've sent it, okay. Have you guys seen it?
Yeah, thank you.
You're welcome. So please open it quickly so that we can continue.
Please, we can.
Okay. All right. So continuing with our headings. So I want to center align BGS Limited. Last week I showed you guys 2 ways to go about it. You can use merge and center, which is like this. So you merge from column A to D like this. Or the alternative is to select the cell with the title, use Control-1, go to alignment. I'm sure you guys are not seeing. Let me share my screen again so that you see my pop-up menus. Can you see my screen?
Yes, sir.
Okay, so I was saying that an alternative to the merge and center is to use Control-1. But I have to select all the cells like this. So I'll select the cells like this. Control+1 shortcut key, come to alignment, and then for the horizontal alignment, I'll use center across selection like this. So it also gives us something like the merge and center, but in this case, the cells are not actually merged, just that the text appears in the center of the cells that we selected like this. And I prefer this method because sometimes the merge and center is a bit troublesome. Okay. But then you see the way the text is appearing over here. If you want to edit it, you actually have to select the very first cell here in A2 because the text is actually in A2. Even though when I select cell A2, I don't see the text there. But from the formula bar, you can see the text there that is in cell A2. When I come to B2, I don't see anything there. Okay. So if, for instance, I want to increase the font size of the BGS Limited, I'll select A2 and then increase the size like this. Okay. So I want to bring the currency sign. So I'll put my currency sign back here. By doing this, I won't have to format my numbers as currencies so that each number will have like a dollar sign or a currency sign. By putting the currency signs at the top, we are trying to tell whoever is reading the financial statement that everything under that side are currencies. They are not percentages or whatever, they are currencies. Okay. Let me center align the title of the financial statement as well. Okay, so I think, and then if you remember last week, I told you guys about the inbuilt cell formatting styles. If you want, you can apply that as well. So maybe you can come to cell styles, then select heading 1. Let me center align like this. Okay. Then the income statement for the period can be heading 2 or 3. Okay. Are we good? So let's go to the format and see what comes after our headings. So income statement of profit or loss account for the period. You see over here, it was just one period. So for the period ended 30th November 2022. Let me put my 2 here. Okay. So the first thing to get is our sales. So let's see what the question says about what the question says about our sales. So over here, the question gave us the sales for the month of December 2014. But remember that we are preparing the financial statement from January to February 2015. Let me add the years over here. 2015. 2015. Okay. We have the sales figure for December 2014. But if you should come down here, the additional information number 1, 2, 3, 4, 5, 6. It says that sales is projected to grow by 15% from December until March. So it means we have to work out for the sales. The question didn't give a specific amount for the sales. So what I want us to do is to create another sheet for our workings. Okay. So you can name this sheet workings. And then we'll name this one financial statements. Spell financial statements. Oh, that's right. Okay, maybe financial statements. Okay. Oh. Okay. Can you see the sheet now?
Yes.
Okay, so when I'll go to my workings sheet. Calculation of sales. A calculation of sales. So, January 2015. 2015, March 2015. Let me hide my grid lines. So in December 2014, the sales is 60,000. And then the question says it's expected to grow by 15%. Okay. So in January, it's going to be sales is actually 400,000. Okay, 400,000. So in January, it's going to be 400,000 times. What was the percentage growth rate? Someone should please check for me. Isabella, can you check the growth rate for me? The sales growth rate.
15%.
15.
Yes, please.
Okay, so that will be 115%. So 400,000 times 115% for January.
So what's the same?
The what? I can't hear you well. Who was speaking?
It's 15% from December until March.
Yeah, so like each month is going to
What is the
increase.
expected?
Yeah, so okay, what it means is that each month is going to be 15% increment.
Yes, please.
Yeah, that's what it means. Yeah.
Yeah, I'm reading from the additional information.
Yes.
The state is projected to grow.
Yeah, okay. Yeah, I get what you mean. So maybe you are trying to assume that from December to like let's say, so maybe you are trying to say that this 460,000 we got over here should be at March rather. Isn't that so?
Oh no, sir. I was giving you the rate. We're asking.
Oh, okay. Okay, no problem. Since I was thinking, if I don't worry, yeah. So 15%, yeah. So you can do 400,000 times 115%, or ask more if you want it. 400,000 plus 400,000 times 15%. That way will work. Okay. So, in fact, what I should, yeah, hello. Is someone asking a question? Okay, so to make
Yeah,
myself,
please, I have a question.
okay, please ask.
Yeah, my confusion is it said 15% from
Okay.
December until March. So I thought it would be spread across.
Yes,
It didn't
but
state
it's
that each month is
okay.
15%.
So let me modify my question to say each month. Do you want it that way? Because it's actually 15% each month. It's like it's trying to say it's going to be growing
Oh, okay.
15% each month until March. So maybe until March, it's not going to grow by 15% again.
Okay.
Yes. Okay. So I was saying that to make my cell referencing easier, I'm going to add December 2014 here. So December 2014. So in December 2014, there's 400,000. Okay, so January 2014 will be this times 115%. And I can drag to the right. Okay. So let me put this. Let me shift all of this below, or let me shift it to column A. So I just use cut and paste. Okay. So let me apply borders and then I'll format the numbers like this. Are we okay?
Sorry, man, I was having a network challenge. So how you feel that how you had that figure in a difference?
Okay, so in this, the question gave us the sales figure for December 2014. It's in the question. Sales for month of December 2014, 400,000, which is what I've put over here. December 2014, 400,000. And then the question also said that it will increase 15%. So this increment is 15% each month till March 2015. So that's what we did over here. So in January 2015, 15% times the previous month, 400,000. In February 2015, to 15% times the previous, and 115% times the previous month. Are you okay?
Okay.
Yes. So now that we have our sales figures, let's go and put it in our financial statements. So sales.
Yeah, please. So the increment is that in December.
No. We already have the value for December, which is 400,000. So whether there was an increment in December or not, we don't really care because the question says that December 2014 is 400,000.
Okay.
Yes.
Thank you.
So this 400,000 can be after the 15% increments or whatever percent increment. But then the question gave us the figure. Let me reshare my screen so that you'll be seeing just that Excel file. Where is it? Okay. So now that we have our sales, let's put it in our income statement. So instead of going to copy and paste, I'll use cell referencing. Okay. So sales for January 2015 equal to, then I move to I'll select the next sheet, the working sheet. Then I'll select the cell with the sales and I press enter. Then I shift it to the right like this. Are we okay? Okay, so let's check our format to see what comes next. So after sales, we have something we call cost of sales. Okay. And from last week or so, I explained to you that cost of sales is basically the direct cost that you incur in producing or in your business, the direct cost, the cost that can be directly attributed to whatever you are producing or selling. So under cost of sales, our format tells us that we have opening inventory. Then we have purchases. Okay. We also have closing inventory. So we'll pick our opening inventory figure. Then we add the purchases figure. We get this amount. Then we will subtract closing inventory. Okay. And that is going to give us our cost of sales. So let's go to our question and look out for opening inventory, our purchases figure, and then the closing inventory. So we can see over here, December ending inventory is 20,000. So this will be our opening, this will be our opening inventory for January, okay? Because it's the closing for December. So closing for December will be the opening for the next month. Now let's see if we can find the closing inventory for January. Let me see. The question said something about creditors value. Let's see. Okay, so there's even information about closing inventory over here. So closing inventory is expected to increase by 2,000 in January from December levels. This is expected to increase by the same figure in February from the projected figure in January. Then it is expected that in March, closing inventory is desired to be 26,000. So the figures for closing inventory is not straightforward. We have to go and calculate it. So let's go to our working sheet. So calculation, closing inventory. So let me copy the same format over here. And let me clear the figures. So December 2014 was the closing inventory. Closing inventory for December 2014 is 20,000. Okay, thank you. 20,000. Now let's see what the question says. Closing inventory is expected to increase by 2,000 in January. Okay, so in January it's supposed to be this. So it's going to increase by 2,000. So it's going to be this plus 2,000. That gives us 22,000. And then this is expected to increase by the same figure in February. Okay. So in February it will increase by 2,000 from January's amount. And then in March, it is expected that in March, closing inventory is desired to be 26,000. So in March, the question gave us the figure, so we'll just input it there. And if you check, you can see that March 2 has also increased by the same 2,000, from 24,000 to 26,000. So it's like a 2,000 increment each month. Okay. Calculation. Okay, so now let's go and do our cost of sales. So costs of sales in inventory purchases. So this plus this will give us something, and then we subtract closing inventory. So opening inventory in January 2015 should be the closing in December 2014, and have the closing in December 2014 over here, the 20,000. So I'll reference that cell. Okay. For the purchases figure, we may have to calculate it. The question didn't give us the purchases directly, so we'll come back to that later. Let's go back. So let's leave the purchases for now. So we are supposed to have opening plus purchases over here. And I'll bring a border over here. Then I drag to the right like this. Okay, so let's show the opening inventory for February and then March. So opening inventory for February will be the closing in January. So like this equal to closing in January is 22,000. Okay. Then opening in March will be the closing for February. So I'll go and reference closing for February. Any questions so far? Okay. Now let me go and bring my closing inventories over here. For the closing inventory, let's go to the format. The format says we are going to less it. We are going to subtract our closing inventory. So in inputting the amount, I'll put a negative sign over there to show that it's going to be a subtraction. Okay. So closing for January is 22,000. Closing for February is 24,000. So I'm just referencing the cells. In case we made any mistake, we'll go and change it from the workings, and then it's going to affect our income statement. Closing for March is 26. Any questions so far? Any question, any confusion?
Please, can you repeat why the closing inventory and then the opening inventory is the same?
Okay.
You're having the same figure.
Okay. I'm having the same figure. Okay, I don't think it's the same figure. So I'll explain to you. So if we are in December, whatever we are closing in December becomes the opening the following month. True or false?
True. That's true.
Okay, so and the question also gave us a way to calculate the closing. It gave us the closing for December 2014. And then it told us that it increased by 2,000 in January, and then it increased by another 2,000 in February. And the question told us that in March it's going to be 26,000. And then if closing for 1 month is the opening for another month, it means if we know the closing, automatically we will know the opening too. So this closing inventory in December is the opening inventory for January. So let's check here. Opening inventory January is 20,000. Okay. So closing in January becomes opening in February. So 22,000. So that's basically what we did. And then over here, the closing here is as you see it over here, 22,000 January, 24 February, 26 March.
Okay, good. Thank you.
And then from the format to, we add the opening plus purchases. Then whatever we get, we subtract the closing. And to show that subtraction, I put negative before I reference the cells. Okay. Yeah, so now let's see how we can go about with our purchases. So is someone asking a question?
Hello.
Yes, please ask
Let's
your question.
go back to this, the financial statement sheet.
The format or the work, what we are doing, this one.
Yeah. So yeah, the purchase is like there is no you've not placed any value
Yes,
there.
yes,
But like
yes.
when you come to
Yeah.
the closing, you have 22,000. Where did you get the 22? Okay, I got it.
Okay, no
Thank you.
problem. Yeah, you're welcome. So we are now come to calculate the purchases. The question didn't give us the amount for purchases. So if you like check, go through and see. So we have debtors, bank balance, fixed assets, creditors, repeating expenses, inventory, retained earnings. Then let's see, expected purchases are here. So the question actually gave us the expected purchases. So we can actually put it in the financial statement straight away. So January is 347,000. So let's put it there. 347,000. February 398,750. 398,750. Then March 458,263. 458,263. Okay, so the formatting for the purchases looks a bit different. Do you notice that it doesn't have the comma separator there? Okay, so what we can do is that we can either highlight and then apply the formatting like this, or let me undo it. I'll use the format painter. So for those of you who don't know what the format painter is, on the home tab, there is this brush icon there. Okay, so it's going to copy the formatting. What it does is that when we select this cell like this, and then we click on this brush icon, it's going to comment the format of that cell. Okay, so like this, to copy the format. And when the format is being copied, you see this animation around the cell. So after copying it, we will apply it to the purchases values. Okay. So two ways, you either select it and then you apply the formatting manually, or use the format painter. The advantage of the format painter is that sometimes a particular cell will have more than one formatting. Maybe you format with the comma separator, and then maybe you come and format with a particular cell color and a particular border style. If you have it that way, if you want to apply the same formatting to another cell, it means you have to apply 3 different formattings. So you select the cell, you apply the comma formatting, then you come and do the cell color, then you come and do the border too. But with the format painter, you just select the original cell with the exact same format that you want. You click on the format painter to copy all the formats. Then you select the other cell that you want and then to apply it there. Okay. So let's go to our format again to see what we have. So after we subtract our closing inventory, we'll get the cost of sales value proper. So it's going to be like this. Since my closing inventory is already in negatives, I'll do this plus this, B11 plus B12, because my closing inventory is already in negatives. If it wasn't, then I'll use subtraction rather. Okay. So when I get it like this, I can drag to the end. Let me call it cost of sales. And because there was an operation on these values, I'll apply a top border to it like this. Let me space them out a bit. Inconsistent formula. Yes, hello. Ask your question.
At row 4, where you have the closing inventory, the CPS, you can see there is icon at the left corner.
Yeah.
I don't know why.
Yeah, Excel is saying that my formulas are inconsistent. It's one of the things. Is yours also like that? Are you getting that same thing on your side?
I've opened the questions that I'm reading, so I've not started typing them yet.
Oh, you have to go along with me. Go along with me. We can
Okay,
ignore
yeah.
that error. It means that you see, sometimes Excel is able to predict the formulas that you use. That's how Excel is able to perform these autofill functions. It predicts what you want to do. So if it predicts what you want to do and then go and do something else, whether it's correct or wrong, it will just give you a little warning that maybe your formulas are not inconsistent, but we can ignore them because what you're doing is actually right. We are trying to add this and this, which we've done over here. And then we bring this figure here. We're still doing the same thing. And then we'll add this and this again. B11 plus B12. So we're actually correct. So whenever you see that thing, if you are doing the correct thing, you can just ignore it.
Okay. Sir, thank you.
You're welcome. So gross profit after cost of sales is gross profit, and then gross profit is the sales minus the cost of sales. So let's go and do that over here. Gross profit. So okay, so one thing over here, my cost of sales is positive, and I want to leave it like that. So in this case, I'll use minus like this. Then I drag to the right. For those of you who are already familiar with preparing financial statements, you will see that this is a bit different in the sense that what you know has to do with two columns. So like your sales should have been on another column, and then all these would have been in the first column. Okay. But what we are doing, everything is in one column because we don't have a lot of information to display. And the other reason being that we are not preparing for just one period. It's for 3 separate periods, 3 different months. That's why we are presenting everything in one column. And it's actually accepted too. So if you think this is quite different, it's basically the same thing, just that I'm presenting everything in one column. Okay. So we have our gross profits now. Let's see if we have any additional income, because per our format, after we get our gross profits, we add any additional income that we have to get our total income. If there's no additional income, then we end it at the gross profits like that. So I don't think we have any additional income. So we can move on. Okay. So after the gross profits, we have operating expenses. So operating expenses. So let's see the various operating expenses that we have in the question. So debtors is not an operating expense. Bank balance is not an operating expense. So we have operating expenses for the month of December 2014, 60,000. So let's see how we can get the operating expenses for 2015. So, okay, so additional information number 4. Operating expenses is expected to increase by 10% from that of December. And this is projected to increase at the same growth rate to match. Okay. So this is like the sales growth rate that we saw, but they are using a different wording for it. For the sales growth rate, it was 15% from December till March. And over here, we're saying that the operating expenses is expected to increase by 10% from that of December. And this is projected to increase at the same rates, at the same growth rates to match. So each month, 10% increment. So let's go and calculate. In the workings tab, we'll do calculation of operating expenses. And then we will use Control B to bolden it. So for December 2014, operating expenses is 60,000. And it's expected to grow by 10% each month. So this times 110%. So it is 66,000 for January, 72,600, and then 79,860. So operating expenses. Let's reference those cells. And I can drag to the right to get the remaining. Okay. So let's see if there are any other operating expenses. Our admin expenses will also fall under operating expenses. So we'll put the admin expenses under operating expenses. And then the question says that admin expenses is expected to be 25,000 each month. So admin expenses. For this, there are no workings. The figure is straightforward. So let's do that. 25,000. I'll copy, paste, and then paste over here too. So that should give us total. Let me check if there are any other expenses. Sales, debtors, creditors. Okay, creditors again. Okay, so total operating expenses should be this plus this. And we drag to the right. I can see that the admin expenses doesn't have the same format. So I'll use the format printer once again to apply to the end. And then the total operating expenses is an operation, the addition of the first two. So I'll bring the top format, the top border over there, like this. So after total operating expenses, we can now have our net profits or loss. It's not always that you make a profit, so you can put net profit or into brackets loss. So let's calculate our ways to see if it's a profit or a loss. So at this point, the net profit will be the gross profit minus the total operating expenses. So we'll do this minus this. Then we drag to the right. Okay, so since all of them are positives, it means they are all profits. So net profits. And then over here, we can bolden it. Then since this is the last, we can apply top and double bottom border like this. Any question on the income statements? Any question? Can you guys hear me?
Yeah.
Yeah.
Any question? Any question? Any question?
Hello.
Is someone asking a question?
Yeah, please, can you do a quick recap for clarity?
Which particular side do you want me to do the recap? Oh, don't tell me the whole show.
The operating expenses part.
Operating expenses. Do you have any confusion over there?
Yeah, I just want clarity. I think I missed some steps, so just please go over.
Okay. So the operating expenses are basically all other expenses that are not directly related to your activities. In other words, the operating expenses are indirect expenses. So the question gave us two separate operating expenses. One is the operating expenses itself, and then admin expenses. You know, admin expenses are not directly related to your operations. Admin expenses are indirect expenses. So from the question, we can see that the two indirect expenses there are the operating expenses itself and then the admin expenses. So for the admin expenses, the question gave us the exact figure for each month. It says the admin expenses expected to be 25,000 each month. Okay. And then for the operating expenses too, it says that even before that, it gave us the December operating expenses, December 2014, which is 60,000. So it's saying that based on that 60,000, they expect that it's going to increase by 10% each month. So we did our workings for the operating expenses. So we have 60,000 in December and then times 110% for January. The same 110% and then February and then March. So that's how we got our operating expenses. Is it clear?
Yeah, thank you.
Okay. Any other question? Any, hey, who is talking about Nyankala? Okay. Let me check something before we continue. Okay, so I think that we've missed something. Depreciation. Depreciation. If you check the additional information, it says that depreciation is provided at the rate of 5% on the cost of non-current assets. The last time we explained what depreciation was, so I'm not going to explain it again. But the only thing I'm going to add today is that depreciation is treated as an expense in the income statement, and it falls under the operating expenses. It's an indirect cost or an indirect expense. So the question, when you check the additional information, it says that depreciation is provided at the rate of 5% on the cost of non-current assets. So let's see if we can locate the cost of non-current assets. Non-current assets is the same as fixed assets. Okay, so we have fixed assets over here, and the cost is 698,000. So it means the depreciation is supposed to be 5% times 698,000. So let's go and do that calculation. Calculation of depreciation. Brackets 5% on costs of fixed assets. So costs of fixed assets. The question is the cost of fixed assets is 698,000. So 698,123. Then depreciation will be 5% of that cost. So this is the depreciation for each month, 334,900. So the good thing about Excel is that if we missed out anything, we can easily come and insert cells and then update our formulas or update our values. So let me insert a cell on top of the operating expenses. So I'll right click on operating expenses and then insert. And I'll put depreciation over here. Depreciation is trying to copy the format of the operating expenses. That's why it has added underline over here. So let me undo that with Control U. Then I reference the depreciation amount over here. It's going to be the same throughout. So let me use absolute cell referencing, and then I'll autofill to the right. This, and then I'll copy the formats. So at the moment, the total operating expenses is not picking the depreciation value. So let me add that to it, plus depreciation. Okay. So you can see that with the addition of the depreciation, we are now making a loss. We are now making a loss. Because the gross profit is 115,000, and then the total operating expenses is 125,900, which is more than our gross profits. Okay, any question? We are done with our income statement. Any question? If you guys want to ask, I'll ask someone about depreciation. Edem, I haven't heard your voice today. Edem Basa.
Yeah, yes, sir.
Edem, do you remember depreciation?
Yeah, I think so. Yeah.
What do you remember about depreciation?
I know that when an asset depreciates, its value reduces.
Correct. But you remember also said something about the accountant's version of depreciation proper. What accountants aim to do when they are calculating depreciation?
No.
Okay. So I was like, depreciation is something like, okay, Charles, talk to us.
I wanted to say what you said the last time. You said depreciation from the accounting perspective is when an asset is bought and then the cost is being spread within the period that the asset will last. So they give it as a sense that every year part of the amount will be treated as an expense.
Exactly. So yeah, Charles has explained what the accountant's version of depreciation is. What Edem said is correct. That's like depreciation itself, something losing its value over time. But then one of the main reasons why, or in fact, that's the main reason why accountants calculate depreciation is that so an asset has been bought. The asset is going to be used for a number of years. Okay, but they don't want to charge the entire cost of the asset in one single year. So they want to spread the cost over some number of years. So they do the spreading by calculating the depreciation so that they can assign a portion of the total cost within each year that asset will be used. All right, so that's depreciation. So let's try and see if we can complete our balance sheet. We have the balance sheet and then the cash flow statement to prepare. By looking at the time, we may be able to do just the balance sheet. Then next week, I don't know if you'll meet next week. Next week, we'll try and do the cash flow statement. Then we move to another topic. So we are done with income statements. Let's go to balance sheets. So for each of the statements, you have to bring the name of the organization or the company that you are preparing it for. So we go again with, let me just copy and paste so that I won't type everything all over again. Paste it here. So instead of income statements, so the question says balance sheet. Another name for balance sheet is the statement of financial position. But the question says balance sheet, so I also call it balance sheet. Balance sheet. For those of you who already know accounting, you understand why the balance sheet, I'm saying balance sheet assets, and then for the income statement, I'm using income statement for the period. Does anyone know why? Okay, please speak up, Eden.
The balance sheet, it summarizes the assets and liabilities at a specific point in time.
But the profit or the loss is for a specific period and not as at a specific point in time. If I say this is my profit, you see that this is my profit for this month, for this week, or for today. So the profit or the loss is for a particular period. But if I say my balance sheet, my assets, I won't say I have assets for a period, but assets as at a period, as at this point in time. Okay, so that's the difference. And that's why I'm using balance sheet assets. So let me go and, okay, let me copy and paste the months and then the currency sign. Okay, so let's look at our formats for the balance sheet. So as we already said, the balance sheet has our assets, our liabilities, and then our capital or equity. Okay, and the name balance sheet also has a meaning. It means that in preparing the balance sheet, some two values have to be the same. And that's where accountants to say these two values have to balance. And those two values is that the total assets and then the total equities and liabilities must be the same. So those of you who do accounting, you know that there's this accounting formula where you say assets is equal to capital plus liabilities. So assets as in your total assets, non-fixed assets, and then current assets. No, the total should be equal to your capital plus your liabilities. Okay. So in preparing our balance sheet, we will state our assets there, we will state our capital there, we will state our liabilities to there. But at the end of the day, the total assets should be the same as total liabilities plus our capital. Okay. So let's go through our question and fish out our assets. So the question already gives us our fixed assets, which is 698,000. Let's see if there are any other fixed assets.
Sir,
Yes.
please, I want to ask a question.
Please go ahead.
With the statement of the financial position format you just shown, most recently, what I normally use, I use the final one to be capital employee, but this one,
I can't hear you very well. Your voice is
Please,
not
I
very
want
clear.
to know. Hello, sir. Please, can you hear me?
Yes. Okay, go ahead.
Please, I want to know the difference between this format and the other format where you arrive by the capital employee.
Oh, okay. The one you were taught in school. I've actually forgotten that format. But this is like the standard format. Okay. It's still the same. You see, that one too, you have to, two specific values have to balance. Isn't that true?
It is.
Yes. But this format basically goes by the accounting formula that assets is equal to capital plus liabilities. For yours, you do the working capital and then the capital employed and all that. It's still the same thing. Yeah, but I've actually forgotten the difference. I'll check on it and then remind you tomorrow.
Let's see. So with that one, we have the
total. So you have your non-current assets, right? So it's like this. Let me see if I can remember. Non-current assets.
Yeah, the non-current.
Then you add your current assets. Then subtract current liabilities.
Yes. Get your net data.
Yes. Long-term liabilities and then capital, right?
Yes.
Yes. It's not very different from this. It's just the presentation that is different.
Oh, okay.
Yeah, it's just the presentation. Yeah, but this is actually the standard. If you check, you do accounting?
Yes, please, but I'm here to measure.
Okay, so when you get to level 300, you'll be introduced to IFRS 1. presentation of financial statements. So from that point, this is the formula you will be using. So it's not it's still the same balance sheet, just that it's using a different approach. Okay. So it's still the same balance sheet. So once the most important point is that you know how to do it with Excel. You know how to model your financial statement. You know how to model your balance sheet with Excel. So if you know how to go about it, whatever format you want to use, so far as it's correct, it's fine.
Okay, sir. Thank you very much.
You're welcome. So let's go with our fixed assets. So one thing this format excluded was accumulated depreciation. Okay, and I'll include it when we are doing ours. So for the fixed assets, you have to bring the cost and then you subtract the accumulated depreciation to arrive at the net book value. So let's do that so that you understand. I want to run very fast so that we can finish the balance sheet today. Okay, so we can get our cost from the question. Fixed asset at cost is 698,000. So the cost is going to remain the same throughout. If you bought something for 698,000, it's going to be 698,000 throughout. Unless you decide to buy again and then the cost changes. So what is going to change is the accumulated depreciation. So the question gives us the accumulated depreciation balance, and this balance is as at December 2014. So the accumulated depreciation, as the name suggests, is accumulated. So something adds up to it each period. So as at December 2014, it is 98,000. It has accumulated up to 98,000. So in January, what is going to happen is that the depreciation that we calculated initially will add up to this 98,000 to get the new accumulated. Okay, so let's do that and see. So it's going to be 98,000, which is the accumulated as at December 2014, plus the depreciation we calculated for January, which is, I'll reference it from my income statement. Like this, 34,900. Okay. So accumulated as of January is 132,900. So let's proceed to accumulated for the other year. The other month, sorry. So accumulated for February will be accumulated as of January ending plus depreciation for February, which is 34,900. And once again, accumulated for March will be this plus the depreciation itself for March. So I'm coming now. I explain depreciation and then accumulated depreciation. The net book value should be this minus this. So let me apply the same formatting over here. Okay, so now we've been talking about depreciation throughout. Now we are seeing accumulated depreciation too. So from depreciation, whichever way you want to take it, whether you are spreading the cost or the value of the asset is reducing, whatever way you want to take it, you know that it happens periodically. So someone will say that this year my asset has depreciated by 20 cedis. Next year it has depreciated by 50 cedis and so on. So all this depreciation goes to add up to the existing one. Isabella, do you have a question?
Sir, please, I missed the point, a step.
Which step did you miss?
The calculation of the accumulated depreciation.
Okay. So well, let me finish explaining. I think you get it when I'm done explaining.
Okay.
So I'm saying that depreciation basically happens periodically. So each year or each month has its value for depreciation. So we can say that this month, this asset depreciated by 20 cedis or depreciated by 5%. So for each particular period, we have a specific amount for depreciation. Okay. But then here's the case that depreciation is something that goes on for a certain amount of time. Okay. So if this year something depreciated by 10 cedis and then next year it has depreciated by 20 cedis. We have to add it to get the accumulated, which is the total depreciation from the time we bought the thing till now. So let me illustrate this. So year 1, year 2. So year 1, we calculated depreciation as 2,000. Year 2, we calculated depreciation as, let's say, 3,000. So the asset was bought in year 1. So if we are currently in year 2, how much will we say the asset has depreciated by? Will we say 3,000 or 2,000 or 5,000? Anyone to answer? Isabella, answer this one for me. When you answer, you understand it.
1,000.
1,000. No, let me ask the question again. So we bought an asset in year 1, and we said that in year 1 it depreciated by 2,000. Year 2, it has depreciated again by 3,000. So as at year 2, no, how much has the asset depreciated by in total? Isabella.
Say. So
Won't it
please,
be
last come again.
okay? So I have bought an asset. Okay, let's say I bought an asset in 2021. Okay. So we are saying that for this depreciation, I want you to take it either way, as in losing of value or the accountant version of depreciation, which is spreading of cost. So let's just use the losing of value. So I bought an asset in 2021, and I said that the asset has depreciated by 2,000 cedis. That's for 2021 alone. No? And then in 2022, it has depreciated further by another 3,000 cedis. So that's at the end of 2022. How much depreciation in total has the asset seen from 2021 to 2022?
5,000.
Exactly, it's 5,000. So that 5,000 is the accumulated depreciation. So now let's make it a bit complex. So assuming we bought this asset for 10,000 in year 1, okay, and we are saying that, let me add my commas. So that 10,000, this is the cost year 1. So as at the end of year 1, depreciation was 2,000. So assuming you wanted to sell the asset as at the end of year 1, which is 2021, how much would you have sold it? Isabella, how much would you
Say
have
8,000.
So that 8,000 is the cost minus the depreciation. Okay, now we come to year 2 too. Now year 2, we are saying that we've seen another depreciation of 3,000 cedis. So assuming now you are in year 2 and want to sell the asset, how much will you sell it for?
5,000.
Exactly. So this 8,000 and 5,000 is the net book value. And then this 2,000 and 3,000 is the depreciation itself. Now let me bring accumulated depreciation. As at year 1, accumulated depreciation is 2,000. As at year 2, accumulated depreciation will be accumulated depreciation in year 1 plus year 2's depreciation, 5,000. Are you confused?
No, say.
Thank you. Since Isabella understands, I know everybody else understands. So what I just explained, that's why we have, let me bring it back. So this depreciation you see in the income statement is the depreciation for that period alone. For January alone, it has depreciated by 34,900. In February 2, it has depreciated by another 34,900. March 2, it has depreciated by another 34,900. But the question says that even before January began, no, it has already depreciated by 98,000. That's this accumulated depreciation balance you have over here. So before January began, the asset had already depreciated by 98,000. So at the end of January, what will be the new accumulated depreciation? It will be that 98,000 as of December 2014, plus January's depreciation, which is 34,900. That's what we have over here. And then February 2, the same logic applies. The accumulated assets January plus February's own depreciation. Okay. So now the net book value is how much you would have sold the asset if someone wanted to buy it. And that one will be the cost, how much you bought it for, minus how much depreciation it has incurred so far. So that is depreciation, accumulated depreciation, and the net book value. I hope you are all okay. In fact, all of us should be okay.
Hello, sir.
Yes. Please
Please,
ask your
when we
question.
calculated the additional information on depreciation, the 5%, no? Like
Mhm.
have you seen, like we were taught like there are different approaches in calculating depreciation, the
Exactly.
reducing balance method and like other methods.
Straight
But this
line.
one, like yeah, the straight, it seems we are using straight line.
Exactly, straight line.
Oh,
And straight line is usually on cost. You see, depreciation is provided at a rate of 5% on cost. Remember, the cost is
okay.
always the same. I mean, the cost doesn't change, or does it change?
Oh no.
So if
Oh,
it is
okay.
5% on cost, it means each period is going to be the same 5% on cost. So since cost doesn't change, it's going to be straight line.
Oh, okay. Thank you.
Yeah, so this is straight line.
Sir, please, what is a written value one?
Yeah, the reducing value. You guys, you let me confuse the non-accounting students. So can we do that next week? If it's the
Okay,
written
sir.
down value, it will be the 5% times the net book value. Okay. But I don't want us to go deep into that now. We can try that out later, maybe next week if we get additional time. Because those non-accounting students might already be confused by this. So let's just leave it to this for now. Okay, so net book value is we subtracted something from something. So we have to bring our borders there, the top border. I hope by now you know the instances where we use the top border and then the bottom borders and all that. Okay. So we are done with our fixed assets. Let's go to the current assets. Use underline other. So let's go back to the question to locate our current assets. So debtors. For those of you who don't know what debtors are, these are people who owe us. Another name is trade receivables. We've sold to them, but they are yet to pay. Customers who owe us. So I'm just doing this for those who don't have any accounting background. That's what debtors means. We have sold to them, but they've not yet paid. So our money is with them. So they are our assets, and they are current assets. They are current assets in the sense that we expect them to pay within a year. Okay. So bank balance too is an asset. The money we have at the bank. We've already done fixed costs, so we can ignore that. Creditors is people that we owe. So another name is trade payables, and then it is suppliers we owe. They've also sold to us, or we have bought something from them, but we have not yet paid them. The same way not all our customers will pay, the same way we won't pay all our suppliers on time, or at that very moment that they supply us with what we want. So operating expenses, we've already covered that in our income statement. Sales to inventory. Inventory too is an asset. Okay, inventory is like the goods we have available in our company that we've not yet sold. So that one too is an asset, and it's a current asset because it is expected that we will sell it within a year. And then retained earnings will be part of our capital. So I think we have all our assets figured out. So in accounting, there's a way of arranging current assets. We say that we arrange them in order of liquidity. It means that we have current assets. Basically, the aim of all our current assets is to convert them into cash. But then it will be easier to convert some into cash, or it will be more quick to convert some into cash as compared to others. Okay. So, but I don't know, I won't go deep into that for now. But just take note that for current assets, we arrange them in order of liquidity. The ones that can be converted to cash quickly are at the bottom. and the ones that will take a little bit more time to convert to cash are at the top. So it's usually like this: debtors and inventory, bank, and then cash. So you see that cash is already cash. So that one is already cash. And then money at bank, if we want to convert our money at bank to cash, we just have to go to the bank and make a withdrawal, or we go to the ATM and make a withdrawal. Inventory too is not a cash, but if we want to convert our inventory into cash, we just have to sell them. And even when we sell them, some may not pay. Okay. But then the next one is debtors, which is at the top. So for debtors, you've already sold to them. But before you convert it, your debtors into cash, they have to pay up first. Okay, they have to pay up first. And depending on the type of debtor you have, they may pay early or not. But usually debtors don't pay early. So that's why we put them at the top. So this is what I mean by we arrange our current assets in order of liquidity. So the one that is most liquid in finance or accounting, liquidity means cash. Somebody will be like, well, I'm very liquid. It means the person has like cash, or most of the person's assets are in cash. Okay. For example, when you hear about net worth of those billionaires, Elon Musk, Bill Gates and all that, they have a lot of assets, but like just a small percentage is in cash. They have money, but then they don't have plenty cash. So that's why you have to know when you're talking about net worth, and then all these billionaires, they have a lot of assets. But when it comes to cash, some may have a lot of cash, but some actually have very, very little cash, even though they are rich and all that. So that's what liquidity means. Liquidity means cash. Okay, so let's check our debtors figure. I don't know if we did workings for trade debtors. We didn't do that. Let's see what the question says. The debtors figure is desired to be proportional to the sales values. Okay, so we have to do some ratio and proportion over here. So it means, what this means is that our debtors figure. Okay, someone has a question. Yes, go ahead.
With reference to what you just said, back to where you arrange the debtors and the index.
I can't hear you very well.
This is my network. Please, can you hear me?
I can hear the sound of you speaking, but your words are not very clear.
Okay.
Okay, if it's not a long question, you can type it in the chat.
Okay, so you let's finish the class. I will
Okay.
type it, or maybe
Yeah.
I wanted to know the debtors and then inventory. Which one is supposed to come first?
Okay. So inventory is actually supposed to come first. You are right. Inventory is supposed to come first because you have to sell. When you sell, those who don't pay will become debtors, and then after they become debtors, they pay, and then you get your cash. Yeah, so you are right.
Yeah.
So let me insert a cell here, and then bring this here, and then I'll delete this cell. Okay. Yeah. So you sell first. When you have inventory, you first have to sell. If you have inventory and you want to get cash, you first have to sell. When you sell, those who will pay you cash, you will get your cash immediately. But then those who won't pay you cash immediately will become your debtors. And when they become your debtors, you now have to chase them for the money before they pay in cash. Or if they don't pay in cash, they might do direct transfer to your bank. Yeah, so this is the proper arrangement when we want to do it in terms of liquidity. Okay, so since we're already discussing debtors, let's do the debtors and then we'll come back to the inventory. I think we've worked out the inventory already. Okay, so let's do the debtors. That one involves some small calculation. So it says that the debtors figure is desired to be proportional to the sales value. Okay, so it means that there's a certain relationship between the sales and then the debtors. So let's check December 2014 and see if we can establish that relationship between the sales and then the debtors. Because before you even get debtors, you have to sell to them. So by definition, there's already a relationship there. You have to make sales to people, and then they buy. And if they don't pay, they become your debtors. So as of December 2014, sales is 400,000, and then debtors is 23,000. Okay, so it means that out of the 400,000 that we sold, 23,000 of that sales is yet to pay. or it's yet to come to us as cash. So it's a certain percentage. Let's try and calculate that percentage. So calculation of this. So let me do December to sales to debtors. Maybe percentage. Okay. So in December 2014, sales is 400,000. Debtors is it 23,000? Yes, 23,000. So 23,000. Do we have sales here? We have sales for January to March. So let's bring that here. We have that in our workings. Then I'll use Oprofil. I hope you guys remember the calculation of sales, the first thing we did. So they say that there's a direct proportion between sales and then trade debtors. So the proportion is that the trade debtors is that 57.5%? Yeah. Okay, 5.75%. Yes. So trade debtors is 5.75% of the sales. Okay. So what we can do is that. So in January 2015, trade debtors will be this times this. And let me lock the cell referencing for the percentage, which is B21. So dollar sign here. Dollar sign here. You get it? By doing this, we've got our trade debtors or debtors figure from January to March. Any question, any confusion? Any question? Okay, so that means everyone gets it. So let me input my debtors values here. So this, and then I drag to the right. So in inventory, the inventory in the balance sheet, remember we have opening inventory and then closing inventory. When we are doing the income statement or the profit or loss account, we use both opening inventory and then closing inventory. But for the balance sheet, we use only the closing inventory. So let's go to the workings and see where our closing inventory is, which is over here. So 22,000. Back to the right. And then bank, let's see. For the bank, the balance at the bank, we have to do our cash flow statement before we can get our bank balance. So I think we may have to pause here today. Do we have cash? We don't have cash. We don't have cash. Okay, so let me take away the cash. Yeah, hello.
Sir,
Yes, go ahead.
Something.
Okay, go ahead.
We made a sale of 40,000 and 23,000 of them for the test. And I think the rest cash and bank.
Yes, yes. What did you say?
I was suggesting if the rest be the cash value.
Yes, so you see that's just one move, that's just one aspect of the cash flow. That one will be your cash inflow. Do you get it? Okay. But remember that there's also cash outflow. You know that we made some purchases too. We bought some things. When we're calculating our income statement, there's some purchases over here. And these purchases, it's likely we didn't pay for all. Maybe some we bought on credit, some we paid cash. So there are some calculations we have to do, meaning that we have to consider our creditors too. Where's creditors? Creditors balance, the supplies we owe. So we have to add the purchases and then consider our creditors too, to be able to arrive at the cash purchases that we made. So that will consider the cash outflow. So the cash balance will be the cash inflow from the trade debtors area, and then the cash outflow from our purchases and then our creditors. And then we
That will give us
consider, and that will give us the net cash flow. That's the cash inflow minus cash outflow. That will give us the net cash flow. After that, we will then
Okay.
consider the bank balance to like the balance as of December 2014. So you see that
Okay,
in the question, we have the balance as of December 2014. So if you want to know the balance as of January 2015, it will be the balance as of December 2014 plus the cash inflow in January minus the cash outflow in January. So right now we have the balance, but the cash inflow and outflow is where we have to do some computations.
Okay.
You get it.
So meaning with the statement of financial position, we will include cash in it.
No, so we don't have any cash. We don't have any cash balance. We don't have any cash balance in it. But basically, what I'm trying to say is that to be able to get the cash balance, we have to do our cash flow. You see, it's the cash flow statement that is going to show you the cash that has come in, the cash that has gone out, and then you'll be able to get the balance that is remaining for each period.
Okay.
So when we do the cash flow and then we get the balance for each period, then we can now fix it in our balance sheet as the bank balance over here.
Okay, sir. I've
Yes.
gotten it now. Thank you.
Yes. So basically what it means is that we have to do our cash flow. But then I want us to continue, okay? I want us to continue with our balance sheet. Let's see how well we can finish it up. So that next week when we do the cash flow and we get our cash balances, we will input it in our balance sheet. And once we input it, you will see that it will balance. Okay. So for now, let's assume our bank balance is 000. So right now we have our fixed assets, we have our current assets too. So we can do total assets. But let me do total current assets first. Or let me ignore and go straight to total assets. Total assets will be the net book value plus all our current assets. So all our current assets, I'll use the sum function. Add everything here like this. Okay. But remember that this total asset is lacking our bank balance. Okay. So now that we have our total assets, we can apply the border over here like this. If you check the format, it's the same thing that was done. Total assets, the border is here. Okay, now let's go to capital and liabilities. So let's start with current liabilities. So our current liabilities will be the creditors, the people, our suppliers that we are here to pay. Then the question has given us the creditors values for the 3 months. So we can just copy and paste them there. So January is 50,000, 46,000 in February, and then 52,000 in March. So 50,000, 46,000, and then 52,000. So aside the creditors, I don't think there are any other current liabilities. Debtors, bank balance, fixed assets, creditors, operating expenses. Yeah. There is no other. And there's no long-term liability too, because we don't have any loan. We don't have any loan as well. So basically, this will be our total liabilities. Now let's go to the equity or capital. So what does the question say? So Has anyone seen any capital value in the question? Any amount for capital? Okay. It's capital and profits. What happens is that for the capital or the we first have to consider any existing capital that we have. Okay. And after that, we will add any profits or loss that we made in the period. The assumption is that when you make profits, you retain it in the company. And then when you retain your profits, it goes to add up to the capital you have. Okay. Unlike, let's say, when you make profits, you send it. The assumption is that when you make profits, you retain it. If it wasn't retained, the question will state it clearly. But if the question doesn't state anything, the assumption is that whatever profits you made is going to add up to your capital. In that same sense, when you make a loss, it's going to reduce your capital. Okay. So I also leave the capital aspect for next week because there are some calculations to be done over there as well. So for today, we've managed to do our income statements. We've done our sales, cost of sales, operating expenses, and then we've got our net profit. We have applied our borders. We know when to apply which border, if it's a top border or a bottom border, or a border with a double underline. And then we've also done our cell yes, I've already mentioned cell referencing. And then the styling of the cells too as well. We use the inbuilt cell styles to style our headings. Okay. So if there's no question, I would like us to end here today. Next week, we will do our cash flow statements and then we'll finish up with the balance sheet. I'm hoping that we can do that in 30 minutes time so that we can move to another topic. I would like us to do financial ratio analysis as well. So if there's no question, it's already 11:17. I would like us to end here for today. Any question? Any question, any suggestion, any improvements? Let me check the chats. So can we end the class for today?
Yeah, please, the recordings will be posted, right?
Yes. I was recording, so we will share the recording.
Okay, thank you.
Priscilla, I'll ask you a question next week. I think I mentioned your name. You didn't mind me.
Oh, sorry,
Or-
I had
thought
to
it
use my
was
laptop.
there are
other
two Priscillas. Okay.
Yeah.
So now I've got two Priscillas. Okay. So next week the two of you should prepare. I'll disturb you a lot. There were two Priscillas here. I mentioned Priscilla and then no one minded me. Now they brought yourself. So next week I'll already two of you a lot. Yeah, so if there's no question, we can end here for today. For those of you who are not following along, please follow along. In fact, as part of your assignments for this week, I'll let you upload this file that we've worked on for today. So that I'll see those who have not been following along and those who have not been following along. So just note that even before your main assignment comes, you are supposed to upload this particular sheet that we've worked on for today. So for those of you who are following along, I'm sure you won't have any problem. For those who are not following along, you have to go back and revisit the recording and then try and submit it again. Are we okay? Are we okay? Okay, so
Please go down to the capital this thing calculations.
yeah, the capital, there are some calculations we have to do.
Oh, okay,
But I don't want, so we will do that next week as well. It's not straightforward, that's why I ignored it. I just wanted us to fill in what you can easily fill in from the question. For those that we have to do calculations, we'll do it next week. Are we okay?
Yeah.
All right, so guys, I'll see you next week, okay? Enjoy the rest of your day. Bye. Yeah, if you have any question, you can contact me. I don't know if you guys have recognized me. When you send me messages on the Google Classroom, it's hard for me to like read a particular message. So you can contact me on WhatsApp. Okay, I'm in the group. You guys should figure out who I am in the group. That one is your assignment. So if you have any question, please contact me on WhatsApp rather, because it's very difficult to reply using the Google Classroom. Okay. So see you next week. Bye.
Bye.